Good morning, everybody. I'm starting with Bitcoin only because it's a display of not only uncertainty turning into uncertainty, it's a picture of the treachery or viciousness of how quickly things can turn on a dime in this market. This was a very good pattern. The best, no, but look, this kind of uncertainty what displays uncertainty in a candlestick format? Gaps. This is a futures contract, so, not so many gaps, but tails, big tails, opposing pivots, highs and lows, wide ranges. And then you get this rather explosive move, right? Power taking out these pivots. And, this bottoming tail bar that we talked about, and it gets a little messy here, but it tightens up, it's tightening up. And then this wide range bar in the inside bar, it's like, okay, here we have a 1, 2, 3, if it'll trigger, taken out. And it's also a good example of requiring that extra little bit of confirmation of trading over a prior bar's high in this situation, that many times it has saved what would be a losing trade. And, but just the next day gapping down, and I haven't checked any news, but gapping down from a pattern like this and taking out all these lows, that's vicious. And just it negates the bullishness of what was going on here and reopens up the door to, will these lows down here break, opening up into the void below? There's nothing below this area. And so we'll see. Right now, it's just, becoming a little bit of a more tighter trading range there. So we'll see how that unfolds. But this is what's going on in the market, where we see, patterns, not exactly like this, but things that look like they're going to go in one direction, they flip in the other. So got to have your stops in. They have to be automatic. Don't get caught. Like, for example, if you were long something like this from that day and your stop was even, say, 50% under this bar somewhere down here or down here, at least you would have been triggered out and not holding the loss down here. All right, let's see where things are at. Yesterday, the markets rallied on the dollar weakness. And you can see right here, it was just that indecision. And then as it broke, the markets, they pushed higher. So that inverse relationship still intact. Dollar up a little bit, really not much, coming down to the bottom of the range. And where buyers are going to show up. And so right now, we'll just see if they show up, like here, coming down to the bottom of that range. Can it get turned around? Futures. What's going on? My screens here flashing on and off because of this restream. Anyway, up a little bit. It does have a void to go higher. This is not a good pattern, meaning it might be able to go higher, but resistance isn't that far off. And 3850-ish on the futures. There's a little bit of congestion there. Really not much, but then more so up the area here, and you can see it's just kind of grinding its way, little pullbacks, and still within the range. This is the kind of pattern that my experience is this thing can flip in the other direction at any time. It was bullish up until here, where it became neutral. And then the Fed news, coming down to the support there, and it's grinding its way into the void. It's just a technical kind of bounce. And I imagine this thing rolling back over. It's just not the kind of pattern. It could go up here, and if it retraces 100%, then we've got something. Whereas after the crack like this, it's like, all right, at some point, odds are it rolls back over and back down again. We look to see other markets, what's aligned and or not. That could guide there. So, Up a little bit here pre-market, intraday still doing well, buying on pullbacks and retests and pushing up there. And so spiders, right? This is our routine. I don't know what happened here. 8:30, maybe there's some news. Whip back down and then back up again. So, I mean, if that's all real, I doubt that is. But if this is real, where it went down and came back up, at least from an intraday point of view, that's bullish price action. To come back like that, and you can see it's up a little bit of my cursor. It's up above yesterday's high, and coming up into subjective resistance area. The way this came down, it's got this price void here. So, what this stuff over here, I see it. I can't not see it, meaning not pay any attention to it, because other people are going to pay attention to it. But my experience has been when prices trade on both sides of this congestion that's right here and then come back up, it really does open up the door to what I call the weakest link, meaning that wide range bar. It's a power bar, but there isn't really much of anything to stop here except subjective things. What's subjective? Moving average you could put on there, a VWAP, a fib line, whatever. But there's just nothing to stop it from going up. And, 15-minute chart, maybe it makes it a little bit more clear how fast it came down with that momentum. So that 380-ish, the whole number, there was a little overlapping bars right there, which you can't see on the hourly chart. And as we go down to some smaller time frame, we can see a little bit more detail where there's those overlapping opens and closes and that congestion there, where prices stopped. So up a little bit, and SPX, man, this thing is tightening up, and yesterday didn't hit any of the numbers, but I was hesitant to do it, and I didn't. Probably, as it turned out, it would have been good for an iron condor, but it didn't hit any of the numbers. And 3880 today. I think it's unlikely, but as I said, there's nothing to stop it from getting there. I mean, I don't know why this market would get in a buying mood. I mean, other than intermarket relationships, which we saw yesterday, the dollar started to drop in the market, and the market rallied. Where's that chart from yesterday? So let's put UUP on here. And you can see, as the dollar was flat, the markets were flat, and then the dollar started to drop and grind, and the market made its grind up here. This was a nice little entry point if you were watching. And a little hook pattern right there. And notice the bottoming tail bars. But this was what ignited, the markets to stabilize. Right. So you can see the dollar popped up, the market broke down. The dollar was at these pivot highs. It couldn't go higher. If it did, the market would have went lower, and it broke down. Market stabilized. So we've been talking about this forever. Keep an eye on the dollar. Keep an eye on interest rates. Right, so 3880 is enough, and 3750 if the market should drop, maybe below 3740. But I'm not too keen on 3750. Right, so 3880 is as close to, I don't even want to call it a no-brainer because it's not, but the call side is picking up some interest. And so I guess, elections, assumption, red wave and all of that, government handcuffed to do, little. So we'll see. Good morning, Alex. We missed you yesterday. Hope you're okay. Um, yeah, so I think it's going to be more of a, whatever direction, the dollar and interest rates may take today as to guides for intraday moves. There's some stocks moving out there. And yesterday was it was kind of crazy, right? As the markets whipped around, there was some, a bunch of stocks that went down pretty hard. They rallied up, they formed sell setups, went down, bottomed, rallied all the way back again. So it's a bit of a treacherous environment if you don't know what you're doing. And if you know what you're doing, you just know, what does that mean? You know what you're doing. Well, even if you're starting out, you've learned patterns, but knowing what you're doing, I think, is more related to just the experience to be able to shift your bias based on what's actually happening, because most of us don't like to shift our bias. Once we believe something, and in the markets, that as intraday traders, that could really play havoc. All right, cues. Down at support, make sure, there's going to be buyers there. And there's a nice little buy setup. And, I got an email last night from someone saying, you know what, they're having difficulty, with the patterns. And, Dan and I always tell people, email us, what are you seeing? What didn't you see? What can help? But, yesterday I pointed out some differences in, what was a buy setup, and I forget what stock it was. And it was okay, but questionable. It wasn't clean. And then I showed a few others that were really like, this is your textbook kind of a pattern. And this is an example of what we would call as a textbook pattern. And it's not only this part of it, but it's the bottoming process. It's the void. And then as you get into the detail of the pattern, where prices come down to support, our bar by bar analysis, where, hey, here's a red bar. It looks like it's going to go lower, and it does. And the buyers show up and turn it into a bottoming tail bar. These are the kind of patterns, and this is why we talk about failure patterns and shakeouts, because, in my early days of really scratching my head to understand what is the difference between, that buy setup and this other buy setup, I couldn't see these things in the early days. And because there was nobody teaching it. So how could I? But through the pain of loss and looking at trades, it's like, hey, look at that bar that, you might laugh, that I sold the low on. What happened there? And it turned back up. That's a pattern. That is something that is really great. And so I'm pointing out this kind of little setup there on the 60-minute, and it doesn't matter what time frame you're looking at, but something that has been bottoming, and you see look at the tails here, right? It's whippy and erratic, and then there's no tails. Look how the tails go away. And so when the tails go away, it's time to go, because this is becoming a picture of certainty. So, and this picture looks like it can continue to go higher. And until it becomes erratic or breaks a prior swing low, that's with the bias. And on the bigger time frame, the 20 might be a stopping point, but you see there's very little at this point unless it violates a swing low down here. All right. The Dow, so close to this swing high, there's going to, resistance is right there. This is a bad buy setup. You may say, Greg, it's going up. I go, yeah, I know, but there are times where it'll go up and this might form an M top. It may continue to go higher, but when you're so close to resistance, where the resistance is not much further from where your stop is going to be, you don't have a very good R to R there. And if it triggers and immediately flips, it's just not a good quality setup. Russell wide down. This is one that could, meet the halfway area, give or take, and just roll back over. But like everything else that came down so hard on the Fed day, it created this void. So just hanging here at these pivots for now. And Bitcoin, we looked at, that crazy pattern, treachery. The dollar, we looked, up a little bit, kind of gapping toward yesterday's high. So, based on this inverse relationship and where this is, creates the thought for me, is the market up here just basically a sucker play, where the markets are up a bit, and everything I talked about, what looks like, hey, they can go higher. For some reason today, no one cares that the dollar's up. I mean, it's not up significantly, but if it continues to move up based on yesterday, we shall see. Nobody cares. Nobody cares this morning. Is it a sucker play for bulls? 13-week is popping up now. That suggests that, well, we all know the Fed's going to raise interest rates, but now it's making a new high. That's not bullish. And of course, this is in part why the dollar is up this morning, because the 13-week is going up. Now, in opposition of that, these other interest rates are down a little bit. So a little bit of a give and take, which kind of balances, I guess, the good and the bad here. When I say bad, from the point of view of, hurting the market or bringing it down versus supporting it. And, and just nothing going on there. And, the dollar up a little, you figure silver's going to be down or flat, which is that resistance. And gold, maybe this is finally gold's time. What, we'll see. It's been going down for, the whole year. We got these bottoming tail bars. We just need to see, hopefully it's not a Bitcoin situation. So here it could be like what we call a 1, 2, 3, 4. The 2 bar, today's bar, creating a bar that takes out the low, and we'll see if it comes back up again. And if it is back up, is the dollar, moving down? I like to see that relationship. And lastly, I'll take a look at, crude oil, which, it's messy, but look, it's bottoming. Look at what we know is a shakeout with 2020 hindsight, right? Because this looked like it was going, to $70, right? Remember over here where it was trending down, it hadn't even reached support yet. So it had that room to go down, and then flips right back up, takes out these pivots, which leads to a bias that the pullback is viable. And, it was pretty messy, but, bias doesn't mean you're going to get the cleanest patterns like what we looked at on that NASDAQ hourly chart. So you got messy patterns that develop within a bias, and we got clean ones, and recognizing the difference between the two is a big step in recognizing price patterns and the analysis that we do. So I think that's about it for me. I'm just going to take a look at the euro here. As we talked about yesterday, there's just so much that is pictures of uncertainty and indecision, or whippy kind of price action, like up, down, and so let's hope after tomorrow and whatever this CPI number is going to be on Thursday, that maybe there's some clear sailing in one direction or another. We'll see how that all unfolds. So take it over, Dan.
Good morning. Happy midterm day. I can't wait till it's over. Earnings season, I love. Got a lot of things to talk about. All right, we actually did two earnings put spreads. One on Lyft. We did a Condor, the 11s and the 17s. So it's gapping down, so there's going to be more pressure on this, but I'm pretty confident it's still going to be a nice open profit because of volatility contraction and because we got two credits. This one's going to be more of a problem child trip. I mean, look at this. Look at this beautiful, all this major support. We sold the 20s and that is getting whacked. So I'm prepared to, take a loss on this. Just I'll be looking at the prices to see when they get out. AMD bottoming pattern, possible breakout, but it still is lagging. Compare it, we had this A/B test kind of thing where we compare relative strength. Look at NVIDIA here, just superior to AMD and even the sector. We actually had this in the weekend letter for a bull called debit spread. They triggered here into the close and we kind of chickened out with the uncertainty, but if you did do it, you're up $5 right now from the entry. So nice job there. This little ride, look, we bought this pre-market at 214, little gap breakout on earnings. But look at this weekly. Wow, look at that. There used to be $30. This is a bottoming pattern. I gotta spread it out. But look at this massive retest pattern. And now it's a gap breakout. So I was reluctant to call it a core, but we'll see. But I entered a half lot pre-market at 214. And so we're already up 14 cents. 14 cents on a $2 stock ain't bad at all. TWOW, this is not earnings, but I saw the gap breakout. That's what we call a bear sandwich. The bear meat in the middle of two wide range engulfing bars, bottoming pattern. Problem is the gap's too big for me. Fernando just asked me about these three, and all three look good to me. It's not a 1, 2, 3 because they're not inside bars, but it's still bullish consolidation. And the top third of that, wouldn't rush into it. McGraw gave me Sierra Mike, which I like as a new trade, both as a put spread and buying over the high. This is a massive inverse head and shoulders. Look, here's my head. And you remember Gustavo? What did you call him, Alex? G-Man or something like that? Gustavo came up with this name when you have two heads. He calls it Medusa. Medusa head and shoulders. Look, we got two heads on the left, two heads on the right. But it's a breakout on the weekly and got a price for it. So that looks fantastic. I'm going to put that in the window. Sierra Mike. Hey, this SMG. We sold half pre-market. My alarm went off and I said, hey, if those are real prints, which they were, sell half. Now I gotta pat myself on the back on this one, and here's why. When this thing started selling off here, I was watching this. Greg, how long was it? You got sick of hearing me talk about it. I'm like, this thing will bottom one of these days, and I am going to be ready. And we got on, I think, right in here. We sold $40 puts, plus we bought the stock. And so now we're selling half at $54, almost $10 gain. Beautiful, beautiful bottoming pattern that we stalked for a long time. Fernando asked about this. That's a sloppy buy setup, deep retracement. You could do half yesterday's high, half Friday's high. But it's worth watching, sure. This is a big multi-month consolidation. This is the last one Fernando asked me about. Sure, it ain't bad. I mean, for me, it'd be more of a put spread, but looks good. Yeah, T2 is on my. Oh, okay. Thanks, Steven. Yeah, I did. Okay, thanks. But let's watch it at the open. But yeah, let me fix that right now. Well, I'll just go ahead and fix it right now. It only took a second. But I have no idea where those premiums are gonna open, none whatsoever. So we'll just watch it. All right, so this is a climactic buy setup on volume into earnings. And now it's gapping down 10, $18, whatever. That's a classic gap and snap pattern. But we got to see what it does at the open. But and we actually, some people were contemplating selling puts on that. And I've warned. I'm like, we're gonna get burned someday, and this trip kind of is the first burn I'm taking, even though it's manageable. But there's been so many landmine gaps this season. I mean, even of monster FANG stocks, Google, Microsoft, etc. And this is a real company, and it already sold off from 125. That's a kick in the bull's teeth. This is a nasty. This is a bear 1, 2, 3 in a nasty downtrend. So this one is not a great gap and snap unless it sets up for a day trade. SMG we talked about. Sequinome, nice little gap over this 2-bar consolidation with a price void. Has earnings next week. It has room easy to 105, 106. On the video we talked about. KSS, the CEO got booted, plus they gave some forward guidance. That's a put spread watch. This ride was the one got into pre-market. EMN alarm. All right, this is a long over 81 bucks. I posted yesterday. My alarm just went off. Foxtrot November, light volume, no pattern. Docking gapping down 26 in a nasty downtrend. I have no idea where that thing's going to reverse. If it does, Sabra, I would have been bullish over yesterday's high. I see a few prints under it. IFF. Sierra Mike. Oh, here's the one that I said you can buy over the high. Let me set an alarm. 48.56. All right, looks pre-market. Looks like the 4 horsemen are kind of petering out here after a little bit of. All right, there's our lift. I'm going to watch the premium at the open, because I'm always so curious of how much volatility contraction we're going to get relative to the stock gapping against us. No pattern here. NOVT lights. Now see again, I mean that's not a with gap and snaps. We want more fluid sell-offs. That's an ugly gap. So I'm in no rush to get on that bullish. 34.50. That's a nasty gap. Pergo, Plant. We had a positive mention in Barron's, but it had earnings. Now it's popping up 68 bucks. We'll come back to you. Cody. Opening flat, big bottoming pattern, $7 stock. Does have a void, 30-minute high, might be okay. Oh, this SEG I mentioned, gapping up over these 2 red bars, put spread idea, price void. If it closes here, it looks like it's going to 260, 270. All right, lift. Okay, the midpoint's 18. 17. So I'm gonna take it. Let's close, and then the calls. So we do have a profit. Let's see about closing the whole condor. Yeah, 23 cents. Let's do that. All right, close, lift 23 cents. So even with the gap down, we were profitable. Next, let me see this.